So one thing I've noticed, and I've actually seen this in other companies, but I don't see it as frequently, is what happens with an S corporation is that there's two different ways to pay yourself as an owner of the company. An S corporation is a flow through entity, and so it flows through to the shareholders directly. And the two different ways to pay an owner or a shareholder is through one, a distribution, and two, through W 2 income. So the thing that I see a lot of is a lot of people just pulling distribution, which is essentially a check or a transfer to you personally. Okay. But distributions should be evaluated on an annual, biannual, or quarterly basis. And so, what that means is that you should evaluate the income that the business has received and then make distributions to the shareholders as you see fit. Okay. So that's one way to pay yourself. The other way is through W 2 income, which you're actually required to pay yourself a W 2 income through an S corporation, and you're supposed to pay yourself what's called a reasonable salary. So a reasonable salary is what you would essentially pay somebody else to do your job. Okay. So I'll give you an example. Let's say there's only one shareholder in a company. The owner of the company, the shareholder, makes a net income of $100,000. So that shareholder pays himself $60,000 because that's what he calculated that he could pay somebody else to do his job within the company. And then he pulls a distribution of $40,000 to himself. And maybe he does that on a quarterly basis and he just pulls $10,000 per quarter. So it's important to really leverage both of them, right? And then it's also important to not only just pay yourself W 2 income, because that's the thing that I don't see that very often, but I do see it occasionally. And when I see that, I notice that you're really not leveraging that S corporation's election. And so it's important to also pull distributions. What I see most often of is everyone pulling distributions and not paying themselves a reasonable salary. It really needs to be a good balance of give and take between wages and also distributions. And like I said, wages, W 2 income, will be through payroll, right? But distributions will just be a check or a transfer to the individual shareholder themselves. And again, you can, and then you can also make those transfers to multiple shareholders, but it is dependent upon how well the company performs and if there are funds available to distribute. So just kind of keep that in mind, that in order to really leverage and really save tax wise, it's important to do both W 2 income and also distributions to the shareholders.